Welcome back. As we said, plenty of stocks to talk about. So without wasting any time, let's go straight to our research team to get you that list. Vivek is joining in first up to talk about Apollo Hospitals and why you should be watching that one. Vivek, good morning.
Well, good morning. Results came last evening. Appears to be a good set as far as Apollo Hospitals are concerned, especially when you're comparing it to our own estimates. Q4 FY24 revenues higher by 15% on a year-on-year basis, coming in at the 4,943 crore mark. Our estimate was closer to 4,880 crore mark. When you're talking about the margins coming in at 13%. Our estimate was close to 12.7%. Profitability coming in at 258 crore. Our estimate was largely in line, close to 250 crore. Now, talking about the key metrics to keep track of, the average revenue per occupied bed has improved 5% on a sequential basis and has gone up by 12% on a year-on-year basis, coming in around the 59,523 rupees. Now, talking about the healthcare GMV, Apollo Hospitals had earlier given a guidance of achieving a GMV of close to 28 to 2,900 crore. However, what's actually transpired as far as FY24 is concerned is slightly muted, 2,687 crore. So that appears to be the only blip as far as Apollo is concerned in an otherwise strong operational performance.
All right, Vivek, thanks for that. And do remember, we'll be connecting with the management of Apollo Hospitals at 9:40 a.m. later today. But let's focus on a couple of other numbers. Abhishek joins us to tell us about Muthoot Finance. Abhishek?
Well, Muthoot Finance, it looks like they made hay while the sun has actually shone on them. So there are two key aspects which actually work for them in this quarter. The gold prices, which have increased by more than 6% quarter on quarter, and competition which has come down due to IFL Finance, they have taken that market as well. So AM growth is about 20% YOY and 6.5% sequentially. In that, the gold AM growth sequential is about 5.3%. Asset quality has improved. Gross NPA ratio has declined sequentially. Net interest margin has expanded to 11.62% versus 10.88% in the previous quarter. So the operating profit growth is really strong at 16.9% YOY and about 8.3% sequentially. Even in the subsidiaries, that is the home finance, AM growth is about 41.5% YOY and about 14% sequentially. The Bellstar MFI, that AM growth is also strong at 62% YOY and more than 13% sequentially. So they have beaten our poll with respect to Anna and Pat as well. Back to you.
All right, Abhishek, thanks very much for that. That's Muthoot Finance, and more on this one as we go along. Bharat Dynamics is a company, a stock which is, of course, has done so well. Upasana is here with the numbers on this one. Upasana, morning.
Companies reported a strong set of numbers in Q4 FY24. Looking at the revenue growth, while it was single-digit revenue growth of 7% on a YOY basis, but PAT and EBITDA saw a sharp expansion. The PAT was up by almost 89% on a YOY basis and EBITDA was up by 75% on a YOY basis. Well, reduction in finance cost and higher other income growth has aided the PAT growth overall. Now, coming to companies' EBITDA margins, they have expanded sharply from 23% to 37% on a YOY basis. Now, looking at companies' overall FY24 performance, the revenue saw a downtick of 5% on a YOY basis. Well, this reduction in turnover is mainly on account of the geopolitical situation prevailing in Europe and Middle East, impacting the supply chain of the companies, what the company has indicated. Coming to margins of the company, they were expanded sharply on a full year basis from 16.5% to 22.8%. PAT has also seen an uptick of 74% on a YOY basis, and looking at the order book, it stands strong at 19,468 crores. So all in all, we are seeing a strong set of numbers coming in from.
All right, thanks a lot for that. That's Bharat Dynamics in focus today. But let's hop across to Abhishek. He's going to talk about Paytm and Jio Finance. Abhishek, over to you.
Well, Jio Finance over there, they have launched a Jio Finance app in a beta version. This will integrate the digital banking as well as UPI transaction, bill settlements and insurance advisory as well. They'll offer a consolidated view of your accounts as well as savings. It's designed for a frictionless navigation, and its future plan includes, expanding into loan solution wherein they'll start with loans on mutual funds and progress towards home loans. Back to you.
All right. Thanks a lot for that, Abhishek. Well, I'm looking at a couple of other names. Welspun Corp, that's a stock on my radar. The operating profit actually was lower. It was down by close to around 21% odd, telling you that there were some signs of pressure. And that's why the margins, if you look at it in the past quarter, compare it on a sequential basis, compare it on a year-on-year basis as well, it's a little bit lower. Two factors played out. One is the employee cost was much higher. The second factor is that the gross margins did see some compression. But you'll see that the net profit was much better. Why is that? Because the other income was higher, the finance cost was lower, and the performance of their subsidiary in Saudi Arabia, well, that was fairly good. And that is an associate company. So that explains why below the operating profit, in fact, the net profit looked quite good. But they've gone ahead, they've reduced their debt drastically, and they put out their guidance as well for the coming year, 17,000 crores of revenue, 1,700 crores of EBITDA. These numbers go down as a bit disappointing. We'll have the management later in the day, so we'll try to clarify why these numbers were a bit of a miss.
All right, Nigel, thanks very much for that. Well, Sunteck Realty and Swan Energy are the next two companies we are focused on. Sonal is here with details on these two. Sonal, morning.
Good morning, Prashant. Let me start with Sunteck Realty. It was a decent set, but if we look at the YOY performance on an operational basis, their pre-sales were up 26%, but collections declined by 32% on a YOY basis. But FY24, they ended with the highest ever pre-sales number at 1,915 crore rupees. Additionally, the board has passed an enabling resolution to raise funds up to 2,250 crore rupees, which will be a mix of QIP, debt raise, preferential issue ADR or FPO as well. Swan Energy, well, the numbers looked weak when it comes to the operational performance. Revenues were up by 50%, but EBITDA declined 51%. Margins declined to 8.4% versus 25.5%, and profits were down by 10.5% as well. Remember, it is into diversified business, real estate, oil and gas, LNG, and is also making headways into the port business. So this is one stock to watch out for.
Okay, thanks a lot for that. So that is Sunteck Realty and Swan Energy. Mangalam is with us to talk about Mrs. Bector's and Yatra. Mangalam, how's it looking?
Well, good performance coming in from Mrs. Bector's, and that's something that has continued over the last many quarters, and that's why the stock has also doubled from the lows itself. 17.5% revenue growth that the company has reported, led by both their biscuit and bakery segment revenues up nearly 18%. Gross margins improved for them as well. And as a result of which, the EBITDA is up 21.5% and the net profit too has grown about 20%. The big trigger for them, of course, over the last many quarters has been them increasing their reach and the retail footprint that the company has been growing. And as a result of which, that's reflected in their growth. Can't say the same for Yatra though, because despite, travel passengers and travel volume increasing a lot, that hasn't reflected in their revenues. That's largely because of a couple of one-offs and the fact that this is a seasonally weak quarter for corporate travel itself. So their revenues have been lower by about 10% year on year. The EBITDA has actually all but eroded at 80% decline. And the net profit too has come in lower by about 38%. Now you'd wonder, why is it that the EBITDA has fallen 80% and the net profit just 38%? Because there's also an element of other income which has actually increased from 3.5 crores to 11.3 crores. The company said the revenue is lower due to a one-time accrual of threshold of bonus in their global distribution system. If you adjust for that, the revenue growth is actually 7%. They've added 25 new corporate clients, and corporate travel is now, despite the weakness in IT sector, back to pre-COVID levels. So expect Yatra to open in the red. Thereafter, let's see whether it sees recovery or not.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: Apollo Hospitals, Muthoot Finance, Bharat Dynamics, Jio Financial, Sunteck Realty and Mrs. Bector's. While stocks with negative news flow: Welspun Corp, ATM, Swan Energy and Yatra.